Let's move on now. BMW has lowered its 2024 profit margin outlook, citing issues in the braking system and sluggish demand in its key Chinese market. How will this impact the Indian auto suppliers? Vinny is joining us with the details. Vinny.
Good morning. And, talking about BMW, overnight what happened was they revised the profit margin outlook for 2024, especially for the automotive segment. They've given an EBIT margin guidance of 6 to 7% versus the previous guidance of 8 to 10%. Similarly, for the motorcycle segment as well, the EBIT margin forecast has been cut to the range of 6 to 7% from previously 8 to 9%. And this is mainly two major concerns and issues that they have highlighted that would impact the company even in terms of the performance for the second half of the year. The key reason one is a downward revision mainly because of the sluggish demand that is in the key market of China. And other than that, what also is impacting them is there is a bit of a delay in terms of delivery from Continental, which is one of the top suppliers for them in terms of the braking systems. So these are the two major issues because of which they have cut their EBIT margin guidance. Now, how does this imply and impact overall the suppliers that are there in India for BMW? So we have 36 Indian suppliers who are supplying some of these auto parts to BMW. Among them, Samil is one of the top ones. They generate around 5% revenue from BMW and consolidated revenue, as well as BMW's overall China revenue for Samil is at around 11%. So significant impact that we are seeing on Samil. That is why today the stock is also down in trade. Now, overall, the company also said that they are expecting a bit of an operational impact following the BMW's guidance cut that we're seeing. So yes, we could see an impact of that. Rico Auto are some of the other suppliers that delivers around 11% of its revenue to BMW. Suprajit Engineering delivers around 4% of its total revenue to BMW. The supplies that come into BMW is around 4%, and other suppliers like Seat, Good Luck, Minda Corp, Apollo Tyres are among the other names. Now, looking at a peer like in the luxury market like JLR, not much of an impact because they've already factored in the weakness that that BMW has highlighted in terms of China market as well as the EU market. So yes, that's factored into the guidance of 3.5% year-on-year revenue growth that they're expecting in FY25. But for JLR, what is the impact that one could expect is because of UBS's note where they're giving a sell rating. Target price is also at 825 rupees per share. Brokerage is highlighting that how, the recent launches have performed well, but now seems like the discounter is going to move on higher, and that is going to be impacting as a downside risk in terms of margins, both for JLR as well as Tata Motors, India passenger vehicle segment and the EV segment. So keeping an eye out on Tata Motors, that also clearly is under pressure today.
Thank you very much for that. Tata Motors extending its loss now down 5.5%. Get into a break. On the other side, we'll put the spotlight on crude oil and gold in our special segment, Commodity Corner.